What are you expecting when it comes to wage growth?
Yeah, so we're looking for another gain of 0.3% in terms of average hourly earnings. So that would push the year over year rate down, but you're also looking at an annualized rate of around 3.6%. So that's starting to look a little bit more comfortable for the Fed when you think about just the overall trend in productivity, but still noticeably above what we saw in the last cycle. And I think as we heard Chair Powell say in his press conferences, he's not necessarily convinced that we've seen a material slowdown, especially when you look at the overall tight state of the jobs market that we still have.
So you mentioned the job market is tight. I believe the last estimate was about 10 million openings right now. Are we expecting to see those 10 million openings, that number stay the same? Because we're hearing about layoffs at so many companies. Twitter is one example. That might be just a case that's kind of an outlier of what's really going on in the economy. But other companies have said, like Alphabet, they're slowing their hiring. They're being more selective about hiring.
Yeah, so overall, we're still looking at a strong labor market in an absolute sense. But I think if you're thinking about the direction, it's clearly weaker. So, you mentioned some specific companies, but we see this in the broader data too. So things like the small business hiring plans at some of the lowest levels we've seen since early 2021. The fact that you do have job openings coming down on trend over the past few months, decidedly lower since where they were in spring, and across a whole host of purchasing manager indices, those employment subcomponents have all weakened since earlier this year. So I think the demand is weakening, but we still haven't seen that increase in layoffs. And so I think that does suggest that the labor market is by no means falling apart, but we do see growing trepidation on the part of businesses to hire new workers, so expand that employment base, maybe backfill positions, and so that does point to, I think, an overall more moderate trend in hiring, since those new hires are half of that net hiring equation, even as you see those layoffs hold steady.
Well, Sarah, as we're having this conversation right now, we're seeing futures tick a little bit higher than they were just shortly ago. The general consensus was a good jobs report could potentially be bad for people that want to pause or a pivot, but the market seemed to be rising even with the thought of the kind of strong job growth and unemployment numbers that we're just talking about, even some wage growth. What are you expecting to see when it comes to the markets and just the general economy if this is a strong jobs report? How does everybody react to that?
Well, I think it depends on some of the composition. So, if you're thinking about this from, fear of the Fed going another 75 in December, or just possibly, sending that potential terminal rate even higher, I think, we'd probably want to see some moderation in wage growth, but still very strong job numbers and an increase in labor force participation. So showing that the supply side of the picture is getting better, because that's really the benign way out of this high inflation pressures that we're seeing from the labor market. So seeing that wage pressure get tamped down because businesses have more selection in who they hire, but still seeing a lot of workers added to the payrolls, supporting overall consumer spending.
All right, I know you're also looking ahead to Tuesday to the JOLTS report. What are you expecting from that?
Well, we saw the JOLTS report earlier this week, and what it showed is that some bounce back in terms of the overall openings. But again, the trend is certainly lower. So this is a pretty volatile measure here over month-to-month basis. But I think we've seen in broad range of indicators demand for new hires weakening. So we see this in the Indeed job postings as well. And so I think all of that's consistent with a moderation in job growth ahead.